All right, welcome everyone. New video. And last week I made 4 bands trading EU and GU, and I'm going to break down my full trades, my full analysis, and make a full case study for you guys so you can learn how to take those trades as well, and how you can use it to your advantage trading against the herd. Because what I do is I enter on a certain position when everyone is looking in a different way, meaning that if everyone is looking for sells, I'm pressing buy. We all have to understand that 10% in this industry is making money, meaning 90% of people is losing money. All right, before we jump in, please subscribe to my channel, leave a like, and definitely hit the comment section with any question whatsoever. I'm happy to go over it, and it would help me tremendously. All right, so let's jump into this chart. Let's have a look at this trade, euro US dollar. This is a trade I took, and obviously I shared this trade before I even entered with my VIP. I put a link below where you can enter in the description. But yeah, I always, when I see an A plus setup, I share everything. I share the exact entry so my VIP members can take the same trades as I do. All right, let's jump in. I will put the replay section to somewhere here, and we will start the analysis. And I always start on higher time frames, meaning in this case, I will start on the 4 hour. Don't mind the other trades on the screen. So what we can see, even go to the daily, what we clearly can see is that price has been pretty bullish, right? Pretty bullish. And after price was pretty bullish, we can see that price was retracing into lower areas, in which we did. Now price is coming into this top area. This is where heaps of people think the market will sell off, continuing making a potential new low. I think that did happen, but again, we cannot predict the market. We can only act upon what we see. So this is how I start my day, opening the chart on the higher time frame, and I just work my way down, going into the 4 hour time frame. And I was noticing that we had this huge news wick over here, and slowly price traded into this area. So what I do, I always check if there are supply zones, POIs, order blocks, whatever in that area where price is reacting from. Because what do I want? I want some traders, sellers in this case, to be induced to get bearish break of structures, to get bearish trend lines. So they think, hey, the market will sell off. I need to open sell positions. And when everyone is looking for sells, obviously, what are we doing? We look for buys. All right, so now I'm jumping into the 1 hour just to see if we can make some sense out of this wick. Well, obviously not. We cannot make sense out of this at all. So I'm jumping it down, lower time frames, 50-minute. We could suggest that this is the whole area of interest where price traded in. Believe it or not, there are some 1 minute and 5 minute POIs up in this range, and price just perfectly tapped into that area. We also have to understand that the price is pretty bullish, right? We have a low, we have a high, higher low, higher high. So overall trend in this case is bullish, right? So now what I'm going to do, I always trade around certain timings, meaning always London open. I allow myself a window of 1 hour before the opening till 1 hour after the opening of taking my positions, because traps are built up an hour pre-London and could be played out an hour after London. So time window, one set of time every single day. The rest of the day, I don't even look at the charts. All right, so now we have this little type of price action. How are we going to make sense of it? Well, first we have to understand structure. And what we can tell is that structure made a high, made a low, made a lower high, and made a lower low. This is not main structure. This is what we call internal structure. External range, internal range. But it's inducing sellers, right? This is the point. This is the key. Now I have to identify liquidity. Well, what can we see? We have a resistance on top. We have a support below. So if price sweeps that support, what happens is we get another bearish break of structure. Now, what do we know? People that trade market structure, people that trade SMC or whatsoever, they always follow market structure. Give it a 1 hour time frame, give it a 15-minute time frame. They prefer the higher the time frame, obviously, but they follow structure. And if we jump it into the 5 minutes, things are getting a little bit more interesting, because what can we see? Price made this high, price comes into supply, starting to push down. Price again comes into this supply, starting to push down, fails to make that new high, right? Very interesting. Again, price comes into what? An area of interest over here, fails to push down. But every time it fails to push down, it creates what? It creates a support zone. Support traders are going long if they see a support. So we know early buyers are trapped in this market. Now, all I want to see is those early buyers getting stopped out. And if we jump into the 1 minute where I take my entries, we now can see how this whole thing is playing out. Price steps into an area, comes down. What happens next? This is all pre-London. Price steps into another supply, and from this supply, we break bearish market structure. This could indicate that we have a 1 minute range all the way from this high to this low. All those early buyers that were looking for longs or taking longs or were in long positions are swept, are taken out. Those stop losses are hit. We can see the power of the drop, very, very aggressive. So now all those buyers are out. Who's coming in? Who's looking for new positions? Those buyers that had their losing positions, had their stop losses hit, now switch their bias because they think the market will go down because they follow market structure. But market structure is here to create traps, and I will show you on the 1 minute price action how that has been playing out. So now we have this area of interest, this supply, this POI, this order block, whatever you want to name it, all comes down to the same thing. This is the area that creates the break of structure, right? So this is an area of interest. Real SMC traders know that first liquidity has to be taken out, then hit of a supply or POI, and then they can look for trades. But not everyone is following SMC to a T, right? Obvious. So what happens? Price comes in, starts to push down. This is inducing heaps and heaps of sellers, right? Sellers are coming in all the way from this area, expecting the market to push down, create what? A new low. And the moment, when everyone thinks that the market will push down, is where I go long. And that's what I did. I just simply entered on a long position over here. This is one of my entry criteria. I have way more. I teach everything over those entry criteria, over this whole strategy in my course. It's up to you if you want to join it, obviously. But then again, okay, so we are in the trade. What happens? Price spikes up, very aggressive, takes out the trend line. The sellers that were entering from these trend lines, sellers that were entering from these supply zones are wicked out. We tap into what? This very clean resistance. From that resistance, what do we see? Another bearish push. What does it mean? It means that again, sellers are induced. This gives me heaps of confidence that the market will at least take out this resistance level. And well, this resistance level is also my break-even point. Easy. So now we let the chart play out and let's see what happens. Spikes going to break even. Risk-free trade for me here. Market moving up, sideways, a little bit, inducing all kinds of traders in. Asian high sellers, Asian high, all even breaks bearish here, inducing more sellers, creates resistance, boom, takes out the resistance, and take profit is hit. And this is what we call a clean trade, an A+ setup. And these are the trades I take, my students take, and I teach exactly how you can take those trades as well. And this trade made me 2 bands, which rests me to go to my other trade, which was on GU. And if you are a little bit, if you like analytics, if you like analysis, you will see that the other entry is pretty much the same. Obviously, every moment in the market is unique, so we never see the same exact patterns. And I mean exact patterns. Obviously, patterns are there. Market makers create them for liquidity, but that's a whole nother story. You will see that my other trade has, yeah, very much similarity to this trade. And all my trades have the same similarities because this setup occurs once or twice a week and it's making me consistent profit from the markets. All right, so let's put this off and let's go into GU where I took my other trade. Back. And well, what do we have here? My other trade. Replay mode to somewhere here. Easy. So again, this is pre-London. I make my analysis, I make my market updates, which I send to my team, which I send to my VIP. But first I start on a higher time frame. I want to understand where price is, what price is doing, and how we can take advantage of potential trades. And the first thing I notice is that we have a bearish break of structure. This means overall people are looking for shorts. And I don't talk about scalpers in these ranges, but the majority of people wait for price to come to an area of interest, wait for price to come into a supply, POI, or an order block, and then they wait for bearish break of structures, even some liquidity sweeps to look for potential shorts. This is what SMC traders do, market structure traders do, Fibonacci traders do, ICT traders do, all in their own way, all with different names, inverse fair value gaps, it all comes down to the same thing. We're all trading the same markets. It's just how you look at the market that makes the difference. And this is very interesting. We could argue, is this a break of structure? Is this a liquidity sweep? Well, who knows? But I know that market structure traders, and market structure is the very base of almost all strategies, will see this as a bearish break of structure, even on the daily, right? So we have identified what happened here. Clean. Now we drop it down an hour to the hourly time frame. Okay. Now we can see we have a clean area of interest. We have an area where price steps in and start to range. It start to be ranging price action, which happens very often in Asia. So now I know, okay, I'm interested. I do see what I want to see. I'm not a trader that when the Asian high gets swept, I look for shorts. No, I always trade against the majority, meaning that if everyone is getting induced in sells, I want to buy. And this works very, very well. All right, now after we have seen where price is reacting from, what is happening on the hourly, we need to get more clarification on the lower time frames. So what do? Right, I go into the 15-minute time frame. And here is where we really need to identify what structure is telling us, because it's a little bit messy, right? It's consolidating price action. So we are going to identify the ranges. Easy. We first create a low, create a high, we create a low, create a higher high. Okay, then we create a low and we create a new higher high. So range is now from this to this. Then we break bearish, right? We have a high, we have a low. We have a high, lower low. Then we create what? A higher high. So we already have early buyers trapped in the market because they see a higher high. This is how people look at the market, honestly. How crazy it may sound, this is how people look. The tiniest of breaks is for them enough. Bullish break of structure. Okay, interesting. So now what I do see is that we have a resistance on top. We tapped into a higher supply, POI, order block, whatever the name, fair value gap, I don't care. Give it a name. We create resistance. But then again, what happens? And this is the beauty. We drop it down to the 5 minutes. We need more clarification. All right, so we have this beautiful push from this low all the way to this high, creating this little bullish 15-minute range. Then price slowly is stepping down. Price comes even in this 15-minute area of interest. 15-minute supply. Inducing what? Early sellers. They think, wait, I see a bearish break of structure over here. We might get a sell-off, right? This is where SMC traders are getting interested, because what happens? We have an area of liquidity. We grab the liquidity. We come into this 5-minute area of supply. They see, hey, wait, price comes in, creates liquidity, sweeps that liquidity, breaks bearish market structure, inverse fair value gap, POI, whatever you want to name it, and they look for shorts and they get a reaction. The reaction goes short because it takes out all those early buyers that were buying from these areas. And this is very, very interesting. If we see this kind of price action happening and we induce more sellers, because remember, if we break bearish market structure from a higher time frame area of interest, it's inducing more traders in this case, sellers. So what happens? Well, we have a bearish break of structure. All those buyers are out, are liquidated. We have a bearish break over here. They are going to identify new POIs in the range. There is even a tinier area over here, which tapped in, broke bearish. But where did I enter? Well, obviously, I saw this push down. I go to the last 1-minute POI. I wait for price to slow down, wick in, come down, wick in, come down, and this is already inducing sellers. These are not the good traders. These are not the profitable traders. These are traders that are taking trades from every POI, but that's the inducement. And when I see a push coming up, I saw this wick, price came down. My exact entry was here, to be honest. It came down, and this was the moment I entered on the trade. Almost no drawdown. Easy. What happens? Price spikes up, very aggressive, into this 1-minute supply. What do we have, right? Resistance. Price steps into this, breaks bearish market structure, 1-minute price action, internal structure, obviously. This is inducing, again, more sellers to enter here. Spikes up aggressively. Again, where does price come into? Area of interest. Again, starting to push down, inducing sellers, aggressive push towards the upside. Well, this is the area where I mainly go to break even. I was already at break even at this area over here because I'm already that much up in profit. There's no need for me to risk any more on this trade. So we let it run to see what happens, and kaboom, take profit is hit. And this is all in a matter of 45 minutes, less than an hour, in and out, made 2 bands. And these setups occur once, twice, sometimes 3 times a week, but we just go for those A plus setup because we need to stick to A plus setup that have everything, and EU and GU give those opportunities some a week. So yeah, if you want to learn how I trade, if you want to learn to take the same trades, to have the same vision on the market, because my vision is go against the majority, against the herd, and you can see obviously that it works. I am profitable. I'm making consistent money with this. I'm sharing this with students. I'm sharing my trades upfront, so everyone can take the same trades. Check if there are places, spots available on my WOP link, which is down in the description. If there are places, be fast because I always have limited spots. I don't want to have my Discord and course overcrowded because I want to focus on quality. I want to focus on helping my students. So yeah, therefore I cannot have heaps and loads of people in. I need to build it slowly to give everyone the attention that they deserve. All right, again, thanks for watching. Appreciate it big time. Please drop a subscribe, drop a comment and a like. And if you got questions, feel free to ask them in the comment section because I'm happy to go over them. Thanks for watching, and I see you on to the next video. Cheers.